Hi, welcome to this video day, which is on the 4th of September. It's Saturday. We've just been looking at simple swing trading strategy in this video. And in relation to the strategy, I just want to look at four pairs, which all include the New Zealand dollar. We're going to be looking at NZDUSD, NZDJPY, GBP/NZD, and Euro NZD. We'll go to the charts in just a moment. Now, in terms of this strategy, is very simple. All we're looking for is big moves to overbought or oversold, and then looking to go against the prevailing trend. Now, if you do this correctly, you can always generate yourself low risk trading opportunities with high potential rewards. Now, in relation to why I picked out the NZD, NZD over the last few weeks has just been strong on all other currencies, and it's overbought in our view. Now, in terms of taking a contrary trade against the NZD, what we need to do is look at the sentiment behind the chart, why the NZD has been so strong, and then look for a peaking of that sentiment, and then time with simple technicals. Now, strategy itself very simple. We're going to take a look at it now, and also the pairs. So let's go over to the charts, but just before we do so, please do keep in mind, it is my view as of this specific moment in time. It could of course change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do, just go and click the link beneath this video and you can get live access to our member centre. You can also follow our Facebook page, join our Facebook group of traders, and finally check out our recommended regulated broker. Now, I've been doing some updates in our member centre for the weekend, so I'm going to use the material from there. So let's go and take a look at the trade setups. Just before we go into our member centre, I just want to show you this chart here, which is the relative performance of various currencies against the USD. It's on the market here, and we can see the NZD over here, up nearly 2% last week alone. It's been strong for the last couple of weeks, okay? It's only beaten by the Colombian peso, Polish zloty, and South African rand, but of course they're minor currencies. I will be looking at USD ZAR and USD PLN in my weekly update, but Kiwi, really strong move, okay? What is behind the move? We need to have a quick look at the sentiment before we go to the technicals. I've just listed up some notes in relation to the sentiment. I'm going to start with this quote up here, which is from Westpac. The RBNZ has recently delivered via commentary some strong hawkish signals that it will start hiking rates in October, and a 50 basis move cannot be ruled out. Okay, now all the banks we have looked at are going for a rate hike. Some are going for 25 basis points, but a lot are going for 50. That's 20 banks, okay, that we look at. There's none of those banks that are expecting the RBNZ to remain on hold, okay? So rate hike, just basically getting factored in to the price, and there's a strong chance in our view that rates will be kept on hold, okay? Now, in terms of the market pushing the NZD up on this rate hike story, that's just part of the story. The NZD is also heavily influenced by risk appetite, and that's been high recently, okay? But I think it's going to change in our view. Traders have been just too bullish of global growth, and it's now starting to slow up. Obviously, the Kiwi, all commodity currencies, are very sensitive to risk appetite and the outlook for global growth. Global growth is just slowing up, okay? And there's big stuff in China and Asia generally. Obviously, New Zealand's major trading partners are there. That makes the entity vulnerable to a correction, after such a big rally. And the evidence is there for anyone to see. The slow up in Asia. I've just put a quick chart up here. This is China manufacturing PMIs, leading indicator of what's going to happen going forward. Now at their lowest level since early 2020. Okay, so basic market a little bit too bullish on global growth. Finally, I put the NZD as being the major that's benefited most from the big miss in NFP. And if you look at NFP on Friday, the market sold off the USD into the number day before and on the morning, so to speak, before the number came out. But then what happened? Afterwards, the NZD hardly moved against the USD, and it was a big miss in terms of payrolls. 750,000 jobs added was expected, and it was 235,000. But the NZD couldn't power on against the USD, so I think that could point to the big bullish move is about to end, and that doesn't just apply against the USD. Okay, the NZD is most extended in our view of the majors against the USD, so it should fall the hardest, and that will make the NZD sell in the crosses as well. Right, that is my review of the sentiment. Now we need to look at the trade setups. First one we'll do will be NZDUSD. Right, so we're on the NZDUSD chart, and in terms of the big move up, you can see it here. We double bottom at 68. Then we're off the upside for 2 weeks, all blues, but just one little red. Okay, really strong move. That is not for short, far short of 4%. Okay, so it's a big move up in a short period of time. Now, when we're swing trading, we're always obviously looking at the sentiment behind the chart to give us clues if there is going to be a turn. Obviously, from our view of sentiment, we just think, can it get better for the Kiwi from here? We don't think so. So we're looking for the move to exhaust. And also what happened on non-farm payroll day, important, because we were basically forced up near the high as we came into the payroll number and then fell back a little bit. Okay, now we're obviously still blue on the day. It's a big move up, so we don't want to jump too soon. You can see my level here, but just before I go through the level I want to sell through, one thing we're always looking at when we're swing trading big moves the upside or downside is the outer Bollinger Bands here. Okay, we use Bollinger Bands. I think they're a fantastic indicator to give you a view of volatility. When the bands are wide apart, volatility is high. Okay, when you get high volatility moves outside of the bands, you tend to come back within. So here, you get big sell-off outside the band, full candle there, rebound back in. Now we traveled band to band. We got outside of the band here, obviously, and now we're back on it. If you look at big moves, the upside or downside with Bollinger Bands, you'll see running outside the bands on high volatility, come back within, you're going to normally get some sort of retracement. Okay, and we expect this to happen. Got a round number here which we want to sell through, 70.80. So we don't just sell too soon. So through 70.80, stop back behind 72 at 72.30, and we use round numbers a lot. That's where the big order flow is. So what we want to do is, if we're coming in to sell, we want to just get clear of the round number, because big order flow always around round numbers. You want to get outside of the battle, so to speak. 70.80 we think will do it, and then we should be off to the downside. Then we pop our stop back behind 72. I'll put it 72.30. So that's the way we view this chart. However, if we were to run on to the upside and come outside of the band, I would sell straight back within the band and probably use a stop back behind 72.50. Okay, this pair is in our guest pair section of the website for the coming week, so you could go and take a look at it on a daily basis. But in terms of risk to reward, we think we could get back to chart lows. But longer term, we're not looking at this just as a swing trade. We think it could develop into a longer term trend and get to 65. Okay, but if we're right, we can pick up hopefully 300 pips with a risk of just over risk of 150 pips. But of course, if we do tumble down, get a nice red, we could bring our stop tight behind the second level. When you get these big moves, the upside or downside, what you tend to have is, at the end of the move, the speculators pile in long, and a lot came in heavily long before NFP and on NFP day. So if we reverse back, the stops get hit, and then we should see a decent sell-off. It's a bit like a rubber band. You can stretch it so far that it snaps back. That's what I'm hoping is going to happen with this pair. Now, the other three pairs are really attractive as well, so let's go and take a look at them. The first one we will look at is going to be in the crosses. Let's look at NZDJPY. Right, NZDJPY, very similar look to this chart as NZDUSD. Big fall down, double bottom outside the outer Bollinger Band, back within. Then we follow through band to band with only one red candle. Same way of playing this one. We've got a round number here, which is support. We'll sell through the round number, stop back behind the next round number. If we run above the outer Bollinger Band, I'll probably sell back within it, or if we punch through 79, sell back through the round number, stop behind 80. Another really good looking risk to reward trade. Now, in terms of next one, it's going to be GBP NZD, which has got a slightly different look to it. Let's have a look. Okay, so we're on GBP NZD, big tumble down, but look at these candles from here, hugging the outer Bollinger Band, those three candles, and this one punches outside. Okay, I want to come back in, or go in long above the outer Bollinger Band and the round number. Okay, I'm just going to pop my stop back behind the next round number. This trade I really like the look of as well. I like the look of them all, but this one really attractive risk to reward. Euro NZD. Let's look at the trade setup. Big move down, and in terms of this one, the way I would play it is the moment got this double bottom over here, or come above the double bottom, and it's a round number as well, so 163.30, and I'm going to drop the stop back behind this support level here. Okay, why have I drawn that support level in? Basically, we go through that support level, approach the outer Bollinger Band, come back through this level. Okay, again, a decent looking risk to reward trade. Well, they all are in my view. Kiwi just too extended. Hopefully we're going to get moves quickly in our favour. We can tighten the stop up to reduce the risk, and hopefully they run into profit. But yeah, Kiwi just so overbought. Also, with these trade setups, you're going to get a result pretty quickly, either right or wrong. Okay, so you're not going to get caught in choppy sideways action. In my view, you're normally going to get a reasonable snapback in these type of trades. We shall see. That is the video of today. Thanks for watching it. Take care. Have a good day.